everybody. Today I'll teach you how much to risk on Forex. The risk management is pretty good if you learn it based on price action. And I trade gold mostly on 5-minute charts as taught by A.L. Brooks. Before that, I want to give a disclaimer. This is only for educational purpose, and please consult a professional before making any financial decisions. Now, I one type of thing that you can do is risking certain percent per trade, but I don't do that at all. So what I do is I'll explain that. So let's say the account size is $10,000 and the average candle size is, let's say, 5 pips, and the large candle, which is like exhaustion candle or a breakout candle, are around 12 pips. In this case, I'll risk only 0.1 lot per trade on a $10,000 account. And you may think that it's very low, but I'll explain the math to you because you have to trade I don't care size as A.L. Brooks teaches you. Now, why only 0. Lot on $10,000 account? The reason being I scale in. If the market goes against me, I scale in and get out break even. I like to avoid loss as much as possible. And if you are trading big lot sizes, it's not possible. Now, let's say I bought 0.1 lot and market falls 300 pips down. But the scaling concept is not that after certain pips I scale in. It's based on the price action. But I don't scale in if I enter like 5,000, and I don't enter if it is around 5,000. Scale in if it is very close to 5,000. So, but let's take it an example. Market falls 300 pips down. So I'm down $300 on my account, and I scale in 0.2 lots. If market goes with my favor, then I can get a break even. But let's say if it again falls 500 pips, now how much I'll be down? I'll be down by $1,800. Let's say I scale in more. Instead of getting out break even, since the price did not go on my favor, it falls more, and I scale in more 0.4 lot. So I am down $3,900 on my account. See, you have a lot of room for scaling if you like get out break. If you like I don't care size. Now, how much profit can you make with this account size only trading like 0.1 lot on a $10,000 account? So I am not a fixed risk to reward ratio type guy, and I enter based on situation and exit on based on context. And I like sometimes I swing partial position, but I get out at if market shows some resistance at a certain time. So how much profit with this account size? Now let's say you got only minimum 2 trades a day, and let's say it can be buy sell anything. In one trade was good 70 pips, another trade was only 40 pips. So this is like just for understanding average. If let's say you can make it less also, but I take a lot of trades. I take around like from 2 to 10 trades a day, and it's a lot. I get out from the market a lot of time, and if you may say that, let's say every time market may go against me, and that's possible because there is always a 40% chance or some percentage that the market may go against you. In that case also you can make money, and I'll tell you how can you do that. So let's say you made $110 a day, which is around 70 and 40 pips gives you 110 pips, which is $110 a day, which is very less when compared to a $10,000 account. But if you don't lose money and if you make it consistently, 20 forex days, it's $2,200, and it's 22% return a month. It's a great 22% return a month is great. But let's say you make only 15%, that's also a great. The thing is, people don't make money on forex because they lose. And when you lose money, I think it's very difficult to make money. A.L. Brooks says 80% to 90% of the time you can avoid losses on forex, and you should do that. You should really do that. Now, I'll be posting like day reviews and my trade reviews. So I'll make like percentage terminology that I enter 10% position, 70% position, like that. So if it is like $10,000 account and that's the pip size is average pip size is $5-7. I don't like mine. If it is average is also $7, I'll be risking 0.1 lot. Average is $4, I'll be risking 0.1 lot. But let's say its average goes $3, then I may risk like 0.15 lot. So if I say I'm entering 10% position, that means 0.01 on 0.1 lot. If I say 70% position, it's 0.07 lot. But let's say it was a good entry. It was a like nested pattern of boys, and I entered 100% of my position, which I never do it. I only entered 70% of my position. So that also decreases the profit, which I talked before. But it's very necessary to do that. The reason is I'll be telling you when I post the day reviews, you'll understand why it is necessary to put the 30% position in hand. So let's say I entered 70% position and market really walks me off and goes against me. So what I'll do is I'll hedge 50% of my position. I'll sell like 0.05 lot. Now if market is going down, 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 and after a point where the scaling comes, I exit the 50% of sell position and scale in double and try to get out break even. So in this way, I can make money on my sell position if it goes against me, and break even on my buy trade. But let's say what if I hedged 50%, instead it went up, so I'll make money on my buy position and scale in and break even on my sell position. So that's how I trade. Thank you.